How's the market shaping up so far this morning? We have losses across the board. Dow futures down 32 points after modest losses yesterday. Stocks are on pace for their third down day in a row, in fact. What to make of this? GFI Group Chief Macro Strategist John Spallanzani. Mr. Spallanzani, great to see you.
Good seeing you again.
So there was weakness in the market in the month of March, despite it being overall a strong first quarter. Dow was down first time since last fall. Is this because of the slowdown in Washington? Is that the reason?
I think the market really had a huge rally. I think the Nasdaq was up 10%, right, first quarter. S&P was up 5%. So March was kind of up and down 1 or 2%, which we kind of expected. We expect the rally to continue April, May, June, another 5% from there. Historically, Republican sweep, we're looking at 15% for the year, and we could probably do better if the Nasdaq continues the leadership that it's had.
Do Republicans, being in control of the House and the White House, do they need to put up some wins beyond the potential, the likely confirmation of a Supreme Court justice? I
think they do. I think that we've had the soft data doing so well, right? Consumer confidence.
Right. Things that are more ephemeral and fleeting, potentially.
And that's good, but how long that lasts depends on how many wins we start to get. So it's kind of like, you know, show me the money now. So we're going to have to start getting some victories. But don't forget that a lot of what's going on is the fact that that pendulum swung from over-regulation now to no new regulation. So we haven't started to discount all that regulation coming off, which we are beginning to, but we haven't seen the taxes and that kind of thing.
So, John, we have this remarkable headline in the Journal today where the market value of Tesla's shares are now greater than the market value of Ford shares. Part of that is optimism about Tesla, but part of it is also investors becoming more worried about the traditional automakers, Ford, GM, and Chrysler. Their sales are slowing down, their inventories are building up, they've got to put on more and more discounts. Is this a sign that American consumers are losing a little bit of steam, even though, you know, consumer confidence is very high? Are they backing that up by spending money? And what does that say about the outlook for growth if that's going to happen?
Yeah, I don't think that it's saying so much about the consumer. We actually put a piece yesterday, you know, auto CDSs are rising. There are some subprime delinquencies in autos that have gotten a lot of press recently. I think that you have millennials, right, using Uber. They're not going out and buying cars. You have different car companies where you could just pick up the car, drive it to a destination, and drop it off. So that's part of the problem. The other reason was, obviously, you went from 3- and 4-year leases, now you're going to 6-, 7-year leases. And part of that was that the only credit that was available early on of the recovery was actually auto credit, right?
Subprime auto.
Subprime, well, yeah, that was kind of like the most loans that were being made. They weren't being made for housing and stuff like that. Banks figured that was a pretty good way to make money, right? You had a lot of Ally Financial, Synchrony, stuff like that, where we're able to do creative financing.
But has that now run its course? And and if so, what's the engine for growth? If we're not going to see it in consumer durables, where is it going to come from?
I think that the driver for growth is, you know, Trump has everybody concentrating on manufacturing. That's not the driver for growth. The driver for growth is the Jones Act being taken off and energy exports. If you look at the charts of energy exports, they're off the charts, right? Whether you're talking about liquefied natural gas, whether you're talking about petroleum, gasoline, and combinations, those things are really off the charts. That's one thing that are really driving exports and probably will continue to drive exports if Trump can get Canada and Mexico involved. So I think that's big. The other big thing is, I'm sorry.
No, go.
I think the other big thing is the housing, right? The millennials, there's such a depletion in the housing inventory. You know, the car inventory is off the charts high, but housing inventory is the opposite. So again, we have a big pent-up demand where I think I've heard lots of people, you know, whether it's schools in the city, that kind of thing, they're looking to do that trade where you could sell, you know, a studio for $800,000 million, buy a house up, you know, a suburbia for cash, and be done with it.
And by the way, on energy exports, we get trade data out today, so we're going to get a window into...
Just really quickly, John, we get jobs out on Friday. What are you looking for in terms of job?
Actually, yes, the ISM exports were actually higher than expected in the ISM, and also employment was. So I think the Fed, you know, right now, because of what's going on in Brexit and the French elections, the Fed is really at 2 rate hikes. The market is at 2 right now, pricing into the end of the year. So that's holding down our rates. Mortgage rates went back under 4%. 1%, that's another positive.
So he talked rates. You get to talk rates later. John, it was great to see
Good
you.
seeing you.
John Spallanzani, always a pleasure.